Hey guys, it's Phil from Bulls to Bears once again, coming to you from a thunderstorm outside my window here where I'm recording. All is well and good. This is an update on our buy, which we put out on Monday for U.S. Steel, symbol X on the New York Stock Exchange. Wanted to show you this, what you're looking at right now, which basically is just to show you an example of when we talk about relative strength to the market. When we're talking relative strength to the market, we're not talking about the RSI indicators that some people use. From my opinion, those things are worthless. But some people use them. I don't put anybody else's, the way they do things down. I'm just showing you what, as I learned from professional traders, and this is the type of thing they look at. If you look at this is a daily chart of U.S. Steel. The blue line is U.S. Steel, and the red and green line here is the Dow Industrials. Now, if you look at the chart, how it correlates from back here, it completely tracks with what the Dow is doing. The Dow runs up, U.S. Steel runs up. Dow pulls back a little bit, U.S. Steel pulls back a little bit. Stays right in line, right in here, this area of consolidation. They were like in lockstep with each other. Then the market ran up, and so did U.S. Steel a couple of times. It kept doing the same thing. It kept following. It was showing what we'll term integrity to the market. Same thing right through this area here. But then something very interesting happened, and this is not a live chart, so I can't get the exact time that this happened this morning, but this morning this happened right here. And what you see is the Dow Industrials here spiked. The U.S. Steel attempted to spike too, and then the Dow continued to move upward, and at the same time U.S. Steel failed. So this divergence here is showing relative weakness to the market, meaning it's relatively weak to what's going on in the market itself. So I just wanted to show this to you guys. This is the things that professional traders look for. Now the next spike up in the Dow here, and if you get a move up with U.S. Steel into these areas, some traders would be looking to short that, because the next move down in the Dow, it could drop further because of that weakness that it's showing. Just trying to show you the basics of what goes on and how professionals look at the market rather than just people looking at chart patterns. Chart patterns are there, but chart patterns are there to show what we're doing, to use it as confirmation, not to tell you what to do. Now, I'll tell you what happened with U.S. Steel today. You see the Dow here the Dow's up 16 points right now, and U.S. Steel is at 690, down another 32 cents. So what we did this morning was we initiated another buy. Did 100 shares this time. It's a nice drop. We're going to be trying to up the shares on this one a little bit to see if we can, grind out a much bigger profit. Again, I'm paper trading here, guys, so I have unlimited resources on it. I want to try to be realistic for you, but if you see, we've got 100 shares. We got filled at, let's see, account history, no, trading journal. We got it at $7.03. So now what that did is that brought our cost average. We have 101 shares at a cost average of $7.03. We're still showing a negative of $13.46. Again, looking to build the position. It's down. Our cost average of $7.03, and the stock is currently at $6.90, so it's 13 cents off. Probably have to get into the 670 range before I want to add more shares here when I'm buying, especially when I'm buying a little bit more and using lots of 100. But that's what happened. We jumped in and we brought our cost average down. Our original cost average, if you remember, was, let's see, pulling up. Our original cost average was recent. Okay, our original cost average was, we bought the first lot at $7.36. I apologize I didn't get a chance to update this, but we just walked through what happened. I bought 100 shares at $7.03, and it brought the cost average down from 736 to where it is right now, which is 703. That's a dramatic drop. So this is how you build positions, and this is how you do it to be created with a cost average where you're always at a point and a position to be able to take advantage of the next swing up in the market, whatever that is. If it continues to trade down, we're going to continue to add to the position, bring our cost average down. Every time we do that, we're making a bigger cushion, so we have the ability to earn bigger percentage returns. Again, our target being 20% return on each position that we do take. So again, we bought another 100 shares at 703, brought our cost average way down to basically 703. The reason why it's the same is we only have one share, and then we bought 100 shares today. So basically, the lot of 100 was done at that current execution price of 703. As it comes in, again, it just traded to 689 here. As it comes in, hopefully, not hopefully, but if it gets down into the 670s range, somewhere in that range, on a stock of this size, probably looking to see a minimum of like a 30 cent drawdown before we make the next purchase. But we'll keep you posted as we move along here. I think things are shaping up very nicely with U.S. Steel, and I hope you're learning from this. Start looking for examples of that relative strength and relative weakness to the market. It's a very important concept that you get to learn. So, like for instance, if the market opens up and the Dow dives 500 points, and you're looking at, say, I don't know, like Micron Technologies or any of these, AMD. If the Dow opens up and dives 500 points and AMD's up 50 cents at that point, it's very relatively strong to the market, and it's showing you that, hey, maybe you want to be long this. Right now, AMD's been in a consolidation period, by the way, and you're seeing the Dow just turning negative on the day, but the Dow was positive, and AMD was slightly down, showing a little relative weakness to the market. These are the things I want you to pay attention to. I want you to go out into the market. I want you to start tracking positions and start looking for the relative strength and relative weakness to the market. For Dow stocks and industrial type stocks, you use the Dow. For tech companies, you probably want to be working more with the NASDAQ index. NASDAQ's up 58 points today. NASDAQ tracks more with technology stocks. NASDAQ's up 58 points right now, and AMD, MU, they're all down. So the chip making sector of the tech sector seems to be relative weak to the NASDAQ. So these are the things that you track. This is how you start to get a feel for the market, and this is how you learn to be a good trader. Again, trading is a skill. You can have the best system in the world, but you still have to learn how to trade it. When I learned to trade on Wall Street, there was, guys 5 in a row would sit next to each other, all trading the same system. Some were making tremendous money, some were okay, some were flat, and some were losing money on the same exact system. So having a great system is the bedrock of what you do, but you still have to learn to be a good trader, and that's what our goal is here. Hope you're getting something out of this. We'll see you when I make my next update on U.S. Steel, and we'll take it from there. Thanks, guys. Phil from Bulls to Bears. Looking forward to helping you guys become good, steady, successful traders. Thank you.